Now let's take a look at oil, trading up 21 cents, $54.01. Now the national average for a gallon of regular gas, $2.24. I want to bring in Patrick DeHaan, gas buddy, head of Petroleum Analysis. Patrick, gas prices are starting to come up. Oil's made a huge rebound. How high do you think we go from here?
Well, I think we'll probably still see the national average fluctuate a little bit over the next few weeks. What we have to really watch for is what comes after Valentine's Day. That's when we usually see the culmination of refinery maintenance demand that starts to pick up steam and a long transition to summer gasoline, which does start as early as mid-February. That's when the storm is really going to start brewing, and the national average will likely really pick up steam by mid-February, or I should say starting in mid-February, and that could last through April or May. But for now, motorists should enjoy these prices. Still 30,000 stations across the U.S. that are under $2 a gallon, but the storm is coming.
Speaking of the storm coming, crude oil has been coming on strong since hitting a low a couple of weeks ago. And, you know, we always talk about these dynamics. All it would take is, it would feel like, is maybe the administration to go and say, okay, we gave, you know, we don't want to shock the system, but now we are clamping down harder on Iran, taking away some of these temporary, you know, some of the temporary provisions they put in there. How would something like that impact crude and ultimately the price of gasoline?
Yeah, great point there. Obviously, Iran's still shipping oil out, and against this backdrop of kind of economic uncertainty, it hasn't really amounted to a big jump in the price of oil. But what you have to watch out for is if we do start to clamp down on Iran, if these temporary waivers eventually are done, if the White House decides to kill them off, and if you have a broader deal with China, you're really going to see a pretty major pinch point. Of course, OPEC has cut production. Even Canada has gotten in on the cut in production. So if you start to see a more robust economy, this could start to see oil prices get back into the 60s, maybe even 70s. Of course, this comes at a time of year when demand is relatively paltry, so keep your eye on that. But we could be heading towards a pretty major pinch in the months ahead if the economy picks up steam, if there's a China deal, and if the White House starts to clamp down on Iran.
Patrick, how closely do you guys watch the weekly rig count? The reason I ask is Friday, I think there were like 25 additional rigs cut. It just, it feels like the American producers, I don't know what their strategy is, but it's like when the price has gone down, you know, just, but how important is it? Because they seem to be able to turn off and turn on these rigs pretty quickly.
Yeah, sure. I mean, this is kind of the day and age that we're in, is it doesn't take a whole lot to put more rigs online or take them offline. And sure, as the price of oil's gone back up, I don't think there's a lot of those in the industry that thought that, you know, sub $50 prices were going to stick. I think it was a culmination of kind of economic jitters. And sure, now, as you see prices going back up, more rigs are coming online. And I would expect that to continue. Sure, you may see some come and go. The easy offs are coming back online now that oil prices have gone up. But it is more of a light switch than ever before. It's still not instant, but you still have to have personnel. And as oil prices are likely to continue going up here on forward, I would expect that, sure, look at U.S. production numbers in light of those drilling numbers, too, compared to the two side by side. And you're painted with the picture that there's still a lot of oil coming out of the U.S.
Patrick, always great talking to you. Thank you very much. See you soon.
My pleasure, Charles.